In this video, we're going to go over 7 financial scams you need to be aware of and tips on how to avoid them. Let's start with phishing scams. These scams involve fraudulent emails, text messages, or websites designed to trick you into revealing personal information like passwords, credit card numbers, and bank account details. Phishing messages often mimic legitimate organizations. We're talking about banks, government agencies, online retailers, and create a sense of urgency. They may include links to fake websites that look nearly identical to real ones. I've seen these on Facebook. At my workplace, there's test phishing emails that come from IT just to test us, and they look real, they look legit, and they look like they're from government entities or some kind of real bank. And if those are anything like the real ones, I can tell you that they are really after your information. So you gotta be careful. So let's talk about best practices to help you avoid any kind of phishing scams. Number 1, be suspicious of unexpected communications. Never click on links or open attachments from unknown senders. Number 2, verify sender information. If you receive a suspicious message from a known organization, contact them directly through their official website or phone number to verify its authenticity. Number 3, don't share personal information via email or text. Legitimate organizations will never ask for sensitive information like passwords or account numbers via email or text. Number 4, check website security. Look for the https:// in the website address and the padlock icon indicating a secure connection. The next financial scam that I want you to be aware of are Ponzi schemes. These are investment scams that promise high returns with little to no risk. They generate returns for earlier investors by acquiring new investors rather than through legitimate business activities. Over the course of history, we've seen Ponzi schemes eventually collapse when new investor money dries up, leaving later investors with significant losses. They often rely on secrecy and exclusivity to attract victims. I've seen these pitches before, and I can tell you they make it so attractive, and the things they do and the way they talk is so attractive that you want to join, only to realize later on the money that you've put in, you're not getting back. So some best practices to deal with Ponzi schemes: be wary of unrealistic returns. If an investment opportunity promises unusually high returns with little risk, it's likely a scam. Research the investment and the promoter. Verify the legitimacy of the investment and the background of the person promoting it. Check with regulatory agencies like the Securities and Exchange Commission, the SEC, or the Financial Industry Regulatory Authority, the FINRA. And please do not invest based on word of mouth. Don't rely solely on recommendations from friends or family without doing your own research. This has gotten me into trouble sometimes just because I wasn't aware and I was not doing my research to know better. The third financial scam: pyramid schemes. Similar to Ponzi schemes, pyramid schemes rely on recruiting new members who pay upfront fees. Participants earn money primarily from recruiting others, not from the actual selling of actual products or services. Pyramid schemes are unsustainable because they require an ever-increasing number of recruits. They often disguise themselves as multi-level marketing companies, MLM companies. So you got to be wary of that because it's so easy to get, again, attracted to the lure of being successful and being within good company that you just don't recognize that it is a scam. If you think you're dealing with a pyramid scheme, here's some best practices. Number 1, focus on the product, the service. If the primary focus is on recruiting new members than actually selling a valuable product or service, it's likely a pyramid scheme. Number 2, be skeptical of high upfront costs. Be wary of schemes that require large upfront investments or inventory purchases. And number 3, research the company. Again, you've got to continue to do your research and investigate the company's background and business model. Now we've got access to so much information, reviews. Reddit has probably covered some of these pyramid schemes, many of these pyramid schemes. So use those resources to research the company that you're interested in investing in and being a part of, so that way you don't fall into any traps of it being a pyramid scheme or a Ponzi scheme at that. Number 4, advance fee scams. These scams involve promising a large sum of money or a valuable prize in exchange for a small upfront payment. Once the victim pays the fee, they never receive the promised money or prize. Common variations include lottery scams, inheritance scams, and loan scams. Some best practices if you think you're dealing with an advanced fee scam: never pay upfront fees. Legitimate opportunities will never require you to pay a fee to receive a money or prize. Number 2, be skeptical of unsolicited offers. Be cautious of unexpected emails, letters, or phone calls offering large sums of money. You gotta be careful. Just because you get that notification that you've got this sum of money that you just have to sign in or do this or click on this link or wire money to an account, and then in return you'll be getting even more money, that's a red flag for me. Also, do not share financial information. Never provide your bank account or credit card information to strangers. I know some people are like, why would anyone even do this? Well, some people are desperate. Some people are just, intrigued by the thought of getting more money and being rich and having a prize, that they do certain things and just kind of gets their judgment clouded. The next financial scam, and this is one that has become very popular in recent years. These are the pump and dump scams. This scam involves artificially inflating the price of a stock, often a penny stock, through misleading or false positive statements. We also see this happening a lot in the cryptocurrency space. Once the price is high enough, the scammers sell their shares for a profit, leaving other investors with losses as the price plummets. These scams often use social media, online forums, and email blasts to spread misinformation and create hype around the stock. Now, let me just address YouTubers, influencers out there who are promoting stocks and cryptocurrencies or different kind of crypto coins or whatever the case is, knowing that these are scams. You have a responsibility to your fans. You have a responsibility to your community to offer legitimate products. If you don't know 100% that what you're promoting is a scam or not, then you don't need to be promoting it at all. This is something that we've seen through 2024, 2023, people getting the rug pulled from under them and losing so much of their investments, so much of their money, so much of their life savings that they are now having to go back to work if they were in their retirement years, or they just lost so much that they don't know what they're going to do next. So for those of you watching, don't trust a YouTuber. Don't trust an influencer. Don't trust anyone on social media telling you to go buy this stock or this crypto coin or whatever it is that's out there that's being promoted as the next big investment. And it's easy for me to say this because I just always approach things with a level of doubt and cynicism, especially when it comes to my money. So I want you to understand that if you are seeing one of your favorite influencers start to promote a financial product, then be wary. And I will even venture off to say that gambling, these different new websites where you can go and select different sports athletes and bet on games in different ways, be wary of those, because all that is just Vegas on an app, right? This is just betting and gambling on an app that you think you're going to be able to win money and getting all these cool promotions from your favorite influencers. And at the end of the day, the companies took your money, the influencers got their commission, and everyone is happy except you. So in this year, let's do our best to avoid these pump and dump scams. Let's be wary of unsolicited stock recommendations. Be cautious of stock tips from unknown sources, especially if they create a sense of urgency. Even known sources, the people that you follow on YouTube, Instagram, Twitter, X, whoever it is, be wary, be cautious of listening to them. Next, do your own research. Thoroughly research any stock, any cryptocurrency before investing, including reviewing financial statements and company information. If some new TikToker or influencer is promoting a coin that they just created, reject it, deny it, block them, mute them, whatever you got to do to get them off your feed, and just move on to another influencer who's going to be able to give you solid advice, solid education and wisdom on how to handle your finances. Another tip, be skeptical of guaranteed returns. No investment can guarantee returns, especially not in the short term. And also avoid following the crowd. Each generation falls into this trap. Don't invest based solely on hype or social media buzz. The sixth financial scam to be wary of in this year, romance scams. These scams involve creating fake online profiles to build romantic relationships with victims and then manipulating them into sending money. Scammers often create elaborate backstories and may avoid meeting in person. They'll ask for money for emergencies, travel expenses, or medical bills, only for the other person to realize that they're not a real person. So some best practices, if you think you're dealing with a romance scam, be cautious of online relationships. Be wary of people you meet online who quickly express strong emotions. Number 2, Don't send money to someone you haven't met in person. Never send money to someone you've only interacted with online. Pretty much a simple way to avoid romance scams. Don't send money to someone that you haven't met in person. Also, be suspicious of requests for money. Be wary of any requests for money, especially if they seem urgent or emotional. The seventh financial scam, identity theft. This involves someone stealing your personal information, name, social security number, credit card details, and using it for fraudulent purposes. Identity thieves may open credit card accounts, file taxes, or obtain medical care in your name. So some tips to help you avoid identity theft, or if you think you're dealing with identity theft. Number one, protect your personal information. Shred sensitive documents, be careful about sharing information online, and monitor your credit reports regularly. Number two, use strong passwords. Create strong, unique passwords for all your online accounts. Number three, be aware of skimming. Be cautious when using ATMs or paying with your credit cards at unfamiliar locations. Anytime I'm pulling money out, I'm always putting a hand over the keypad when I'm typing in my PIN, and I don't want to take any chances with anyone walking by, taking a video or a picture of my credit card or my debit card, or seeing what I'm pressing with my PIN number. I'm always keeping that covered whenever I use my debit card or my credit cards. Again, a part of me feels like we're getting better about these scams, but the other part of me still feels like we have a long way to go. By being aware of these common financial scams and following the best practices that we just talked about, you can significantly reduce your risk of being a victim. Remember, if something just sounds way too good to be true, it probably is. Always do your research and exercise caution before making any financial decisions. And remember, never, ever trust influencers when it comes to your money. Now, if you want to learn about some of the investments and the strategies to actually build wealth, check out the video on the screen, and I'll see you over there. Peace.